Welcome to the world of Jurassic FX. In this ancient land, the new ruler is the global code of conduct, where the last two great beasts of a dying breed seek to preserve their territory. These two beasts go by the name of Prehedgesaurus, otherwise known as Principle 11, and Last Lookasaurus, otherwise known as Principle 17. Let's first examine Prehedgesaurus. He knows pre-hedging is in itself a misnomer, but he must retain this legitimized front-running ability. Fast forward to Annex 1, with rose-tinted examples of bygone days when the hedge happens before the client trades and the client benefits, not the cold, hard 21st century example of the market becoming aware of an order before a trade is executed, and then hitting every bidder offer in sight, so that if the client has more to do, he's immediately offside. Give me the full amount, says Prehedgesaurus. You'll be okay. The problem with any good example in Annex 1 is that the market the code discusses does indeed move at a glacial pace, when the reality is that the pre-trade hedge has occurred in microseconds on one of the 50-something venues available to Prehedgesaurus. To Prehedgesaurus, ask your customer if they're ever really happy with this behavior, and indeed whether they believe they are certain that no participant will trade against the principle of the code. I've asked those same customers, and they're happy they can control their own trading, and they don't need the help of this tool so open to abuse. So it's very simple. Pre-trade hedging has no place in a modern digital electronic marketplace. So on to our old pal Last Lookasaurus, who makes his glorious last stand in Principle 17 of the Global Code. A nirvanic world where last look is transparent and clients have the use of last look disclosed. Yes, this is the same great beast that cast its shadow over most of the scandals in the last few years. The same beast currently at the center of a well-publicized US case against a large bank, and the same beast whose abuse was highlighted in the latest CFTC fine. Last Lookasaurus tells us in the code that last look may only be used as a risk control mechanism in order to verify validity and/or price. There is mention of consistency with the current market price, but no mention of a time frame for that consistency. In previous drafts, a 100 millisecond window was mentioned, but that has disappeared from the latest draft of the Global Code. There is no detail around last look, but merely the mention that any trading activity and hedging activity in the last look window is likely inconsistent with good market practice. This is woolliness of mammoth proportions. The real T-Rex and Stegosaurus both became extinct around the same point in prehistoric time. The same should be true of Last Lookasaurus and Prehedgesaurus. Principles 11 and 17 of the Global Code are the worst examples of consensus, when no one individually actually believes in what is said collectively. The authors of the code, the working groups, and the participants should stand up, speak out, and reconsider this draft before it's too late. There is an opportunity for everyone involved to lead. The code is failing in its duty of care to clients by the legitimization of these flawed principles. Modern-day FX practitioners should not be asked to adhere to principles from a Jurassic era.